It's Maximus Analysis here for January 19th, 2016. We see that we're continually getting run up and run downs, a lot of volatility, but not a break of previous highs. So we need this 1871 area to hold, which we see has been a past level of support for the past couple times. It's been tested back in August and back in September. The low of Friday's candle was around 1849. We need at least to see how it's going to break the previous high, which is all the way up now at 1908, and give us a buyer's bar at least. Again, if we do not see this and we see a gap down or continuation down here, I'm actually hoping that this is not a midpoint of what could be potentially something similar to this, because this is kind of a continuation pattern for now that would give us something around the 1722 area. So again, they need to give us some type of hold of this base currently. If we go back all the way to the left, we can see that again, this is last October's move, which we see has been pretty much a measured move. An exact replica of this move and this move. You don't believe me? We've gone over it numerous times on this channel, and again, we'll look again. You can see that this was basically around the same move and it's continued down. Now we have to see if they're going to give us some type of retracement, which they haven't as yet. So we'll look again. Now we'll look at the NQ. NQ, we see that we have, come on, where's the NQ? Okay, there you go. We kind of have the same type of pattern. This is what I was showing before on Friday. Basically, this is some type of continuation pattern, and we do want to see these levels hold. 4100 and of course the 4000 level, which is basically a high significant area. This would be our level of support that we would have right here. Oops, let's see, right here. So again, we have held support, but besides that, again, we don't want the same type of movement that we see a replica if they break down these lows, because then it could be a continuation, and this could be potentially a midpoint for a continuation down to around 3700. Again, this is all saying if they can continue to hold these higher lows and give this as a significant pivot for the upside. Now the pivot for the upside, if they can get some significant volume, you should see a high move up, even if it's a dead cat bounce. But again, we can only deal with right here, right now, and we do want to see a break above these previous highs. Now you have the YM, again, given that same type of pattern that we're talking about, and you can see again, if we look to the left, we need to see these levels hold. CL continue to the downside. Remember that we're rolling to the H contract if you're trading it intraday. Again, there's going to be a significant drop off with that G contract going forward. So you can see they've broken through this target and potentially to get to that 25 level. 18 I'm not sure about, but again, right now there's nothing but air for a long time. So again, I'm pulling this all. Let me look a weekly to see if we can get any type of support level, and you can see we're below these lows back in 2009. So again, right now we just have this low of 25, and I'm seeing, again, 2002 this was 18 bucks. So let's not look and say that nothing like this could happen. Again, you don't want to chase, because now that we're having a lot of talk with Iran and some China stuff regarding, remember, there are no correlations between the equity markets and this, being that the downtrend started again from June 2014, and you can see with the ES, June 2014 was around here. So we've moved up and sideways versus downtrend. So don't let people fool you in regards to trying to find correlation between the two of them. Now Apple, we can see that it's really gotten a deep retracement. I mean, again, we really have to see if it's going to hold this 90 area, or at least get back above. If we could get some type of dead cat bounce even to this 105 area, you could continue to short or see how it reacts toward it. But again, things have been gapping up and fading down. If we look at intraday, let's say a 5 minute, you can see that based on today's action, it gapped up and then just faded all the way down. We would need to see it break back above that 99 to give us something to look at. So again, you have the high beta names. Again, Amazon not really giving much volume back. You have Netflix, again, giving you $3, but not the type of performance that you really would like to see. You'd like to see this close near the upper quarter of the daily range, but it did not. So price line was up as much as 25. Again, this is very oversold. And a lot of the charts are very oversold. So again, I was expecting, or still am expecting, slightly a dead cat bounce. But if they break the low, let's say on the ES of 1849, and close below it. Again, it's not about tapping these levels, it's about closing below it for at least 1 or 2 days. We can then see those continuation patterns formulate. You have Tesla, again, a lot of gap up and not following through action. SPY, again, is going to be mirroring that. But again, you want to see a break above this 190.13. Google, again, $8 on a $700 stock might seem, oh, it's green. But again, trying to keep things in context that it needs to get now back above this 740 to 735 area. And quickly, again, this retracement is not bad. So again, so you've got to make sure you be, kind of looking at things, not with a jaded eye per se. So again, you see that we're below the 50% mark. That's the yellow mark right down there. We'll continue to look and see how things are going. LinkedIn still not giving a buy signal, but if it does, it could be, I think it should still be hovering around this 61.8 level. No, it's close below it, but again, we'll see if it can regather and get some steam to get back above that $200 level. But it hasn't. It's just been kind of in free fall, but again, it's oversold. So again, a rally of 1 or 2 days might be sold into, but might happen. I don't know if that's your cup of tea regarding trading. And again, there's many ways to skin the cat, and we'll never tell you your way is wrong or right. Just make sure you have a stop. And again, don't hold things, because you can see now that, again, Twitter, it's only a $16 stock. It's down about $1.25. No reason for you to be holding this one unless you're an investor. And if you started off holding it at a $52 level, saying it's going to come back, I think your capital can just be used in another place. It's not to tell you that this is a wrong trade, but make sure it's a trade, not an investment. Okay, Fitbit also, same thing, still way below its IPO price. So again, once it gets back above there might be some people that get up there and say, I want my money back. So we'll see how it reacts, and if it stays below these previous pivots that we have going around here. So again, there's a band of resistance that's going to be coming in, a lot of overhead supply trying to get their money back. So we'll see how it reacts, and we'll see what happens overnight. We've been getting a lot of different news, and it's been a real difficult environment to hold stuff overnight, unless you're on the short side. So again, we'll see how things are going, and take it from there. Take care.